Hi friends, this is Rahul Jain, and in today's video we are going to discuss a few parameters that can help you gauge the ongoing market sentiments. Sometimes you may have noticed that a particular stock's fundamentals have not changed much, but all of a sudden the price of that stock may have fallen by 5% or 10% and so on. So the big question is, what drives stocks prices up or down in addition to the fundamentals of the stocks? Let me introduce the concept of market mood, also called market sentiments. Market sentiments is the overall attitude and emotions, greed, fear, conservatism or aggressiveness of investors towards a given stock, sector, index or market. For example, if the prices of a particular stock or a sector or an index are moving upwards, we say that the market sentiments are bullish. And if the prices of a particular stock or a sector or an index are moving downwards, we say that the market sentiments are bearish. It's extremely important for investors to understand the current market sentiments because, for example, when the market sentiments are bearish, you as an investor may be able to buy a fundamentally good asset at a more reasonable price. Now, there are various indicators of market sentiments at any given time. Let me explain three such indicators. The first indicator is India VIX. India VIX is an indicator of market volatility. Value of VIX on a specific day shows the expected market volatility in the next 30 days. As you can see in this graph, during the Lok Sabha elections of 2024, India VIX peaked at around 26 levels on 4th of June 2024. Generally, if VIX rises, it indicates higher volatility ahead in the market. This may also be an indication of impending correction or decline in the market. This is because higher VIX is an indicator of higher fear and uncertainty in the market. While when VIX falls, it indicates lower volatility ahead in the market. This may sometimes indicate to impending upward movements of the market. Generally, it is observed that when VIX rises, Nifty falls and the other way around. The second indicator is periodic high-low that you can check against an index, for example, against Nifty 50. For instance, if we compare 19th and 25th July period with 26th July, 2nd August period, we will see that in the 19th and 25th July period, relatively more stocks within Nifty 50 were trading near their 52-week lows. Market sentiments were therefore more on the negative side. Nifty 50 therefore saw minor corrections. So in any index or a sector, one can gauge the prevailing market sentiments by checking how many stocks are trading at their high price range and how many are trading at lower price range. The third indicator is called the Market Mood Index MMI, developed by Windmill Capital Private Limited, a SEBI registered research analyst. This index categorizes market segment into four broad buckets. MMI is calculated by taking into account 6 parameters, namely FI activities, volatility and skew, momentum of the market breadth, price strength, and demand for gold. So our key takeaway is that investing decisions are not solely driven by fundamentals of a stock. Market sentiments have a role to play in stock prices, and as an investor, we should be cognizant of market sentiments before taking investment decisions. That's all for today's video. Hope you understood how these indicators tell us about the ongoing market sentiments. See you in the next one.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.